It doesn't take that much of a growth in adoption to give you this really substantial growth in price. We've not seen any kind of bubble yet. I mean, the cycle is different. All these other bull markets, they've only lasted about a year. The demand from ETFs, from people like MicroStrategy, how are we going to get an extra trillion to come into Bitcoin? I plan to hold through Bitcoin 1 million. And I would recommend most people to try to hold through Bitcoin 1 million. It's not a crazy number. It's very real. But I think we're going to get into panic mode. I really do. Bull markets last 3 years, and then we crash, and that crash lasts a year. This is not subject to interpretation, right? This describes the way Bitcoin has been since really the first recorded price movements, like October of 2010.
Bitcoin is heading for an unprecedented price milestone, and it's closer than anyone expects. According to Fred Krueger, a seasoned investor and Wall Street veteran, who foresees a financial tidal wave that could catapult the cryptocurrency to historic highs. Fred Krueger has discussed his success with skeptics like Peter Schiff, who adamantly denies Bitcoin's value. Krueger points out the big mistake that Schiff and many others have made in missing the massive opportunity that now makes up the majority of his net worth. Krueger highlights a dramatic influx of wealth flowing into Bitcoin from traditional finance institutions. He emphasizes that most people underestimate the sheer scale of this movement, and as more institutions jump into the Bitcoin game, he predicts the surge could surpass anything the market has seen before. Bitcoin's price sits just over $70,000, still down over 1% in the past week. As BTC gets closer to the six-figure mark, Krueger says we're about to witness unprecedented territory in cryptocurrency. Let's get right into the interview as he gives his latest Bitcoin prediction and where we're headed in the coming months. Drop your comments down below and subscribe if you enjoy the content we do here.
As time goes by, we have this adoption story that's happening with Bitcoin, even stronger than the price graph of Bitcoin. So it's growing at around 16% per year right now. Only 16%. So it's doubling every 4 years, let's say. Every 4 years, the number of Bitcoiners doubles. The way I look at it, about 50 million real Bitcoiners. There's 50 million. Now, some people say there's 100 million, but there's some threshold. And I would say there's 50 million people who have a couple $100 worth of Bitcoin. There's only 15 million people who have $1,000 worth of Bitcoin. That's it. We all have this sense of how great Bitcoin has been as an investment. And there's like lots of different ways to slice that and dice it, right? You can say, well, it's been trading for 15 years, and over the last 10 years, it's been the top performing asset in 8 of the 10 years. That's one way to look at it, right? You can look at it peak to trough, drop down, all these other different ways. But, if you really want to understand what it is, you have to sort of say, is it following some kind of statistical pattern? And you could sort of say, well, maybe it's an exponential pattern, right? Like maybe it's some constant growth curve, really. And there's a lot of volatility around that growth curve. So you can model that. You can say, does it fit an exponential growth curve pattern? And the answer is no, it does not, okay? It doesn't actually fit that. And then you can ask yourself, and by the way, stocks fit that really well. So if you look at the S&P 500, actually it is a very much an exponential growth pattern. Now, again, just like if I told you the S&P 500 goes up 11% a year, you're going to be like, not always, it didn't do that in 2019, right? It was down a lot. So it still wobbles, but there's a correct model for the S&P, which is it's a constant growth rate. It's growing at 11% a year. And that number is about the same as it was 10 years ago, right? Now, Bitcoin is not doing that. Bitcoin objectively is not doing that. Bitcoin was growing at 500, 1,000% a year back in the very early days. And it's slowing down, right?
Yeah.
And that slowing growth model is exactly a power law, right? So this is just the accurate description of what Bitcoin's been doing. On average, it will either double or it'll go down by half, roughly. And that's kind of what the power law tells you. The second thing it tells you is you have some metric of valuation. It's a very rough metric. You can't trade on it like day trade or anything like that. But we have this power law trend line. If you're at 2 times the trend line, you're getting into elevated territory. Now, it doesn't mean you're going to stop there. You could go to 3 times trend line. You might go to 4 times trend line, but we're starting to get more pricey. So what does that mean? That might mean you stack less. If you're earning money and you're stacking, maybe you stack less hard at those kind of prices. It also means that if you're kind of doing some rebalancing and you want to keep a certain amount of cash, you shouldn't think of it as a trading thing, no matter what. But you should never trade Bitcoin, right? You should never trade Bitcoin. But if you want to reallocate somewhat your position, that tells you something. And so it also is very useful to look at it versus other assets, right? So you can look at these power laws versus gold, versus the S&P, and you can sort of see, well, right now, gold is extremely overpriced relative to Bitcoin. So it really tells you something. Probably a really bad time to buy gold. Even though everybody's saying buy gold, even though people are lining up in front of banks, probably a really bad time to buy gold, right? There's sort of 2 things to Bitcoin. Number one is it's hard money. But so is gold. Gold is hard money too, right? So whenever there's fear of debasement, both of those things are moving up. On the other hand, there's an adoption process of Bitcoin, right? Bitcoin has certain advantages versus gold that are very unique to Bitcoin, right? As a hard money. And you don't need to protect it. You don't need to put it in a vault. How many people have 10 Bitcoin? For the US, it's about 30,000 people. That's it. Worldwide, it's about 70,000 people. Yeah. But as this thing compounds, every year, so now it's going to double in 4 years, 8 years, it'll quadruple. And in 20 years, there will be 1 billion people who have Bitcoin. So we will get there to 1 billion people that have Bitcoin. But as these people discover Bitcoin, they have to buy from this pool. And so the price does not go up. It goes up to the square of that number, roughly. So there's a quadratic response, which if you think about it, makes sense because they're competing, but they're pulling down the amount of Bitcoin from it at the same time.
A recent prediction from renowned crypto analyst Plan B has captured the attention of the cryptocurrency world, driven by the growing influence of Bitcoin ETFs. But that's just the beginning of an extraordinary forecast that lays out Bitcoin's price journey through 2027. From January through July, he predicts that we'll see a chain of events that will bring its price from 200,000, climbing all the way hitting 500,000, and even a scenario where Bitcoin hits $1 million by the beginning of next year.
The average total length of the bull market is 3 years, ending in this crescendo overvaluation. And then we have this drop. That's not really halving related, it's just miraculously we got the halving coming around, and so that's bullish. Therefore, we're going to rally, right? Everybody gets excited again. I kind of actually don't even think it actually even makes sense relative to past markets because it has everything to do with the ETF. The fiat world is so big, right? There's so much, trillions of assets in the world. And when you start quantifying how big these assets are and how fast they're growing, you realize that there's plenty of fuel to fund that power law for the next 20 years. So there's no problem. There's no problem like this tree is not going to reach the peak height at all. Like this is like a little sprout here. If I had to rank the bad assets, I think bonds are the worst. But, arguably property could be equally bad or maybe even worse than bonds, right? And the reason why I say it is you've got some major trends that are going to work against property. You kind of have 5 years to jump on the train, that's it. In many ways, I prefer the old world. I prefer, no IDs. I prefer no seatbelts. I prefer, I like just freedom,
Yeah.
Is it going to become much more efficient? Yeah, like this, there's going to be a lot of things that are more efficient. Well, the government can't provide anymore. Like the government's tapped out. I think the printing stuff, it's kind of why I called it the final chapter of fiat. I don't think fiat is going to survive beyond 20 years. I think we are going into a world where, you try to pay with dollars for a lot of things. They'll be like, no. I think in that world it'll be just fundamentally different from our world, right? Because if you think about our world, it's entirely built on credit, right? Everything, you're already starting to get into the debt system. And in the debt system, you want to get further and further in debt and accumulate assets and stuff. Yeah, but you don't want to own a house in a deflationary system where the only thing, the unit is Bitcoin. Terrible, like your house is going down every year in Bitcoin terms. But in 20 years, I don't think that priced in fiat is going to even make any sense. Nobody's going to care about fiat. So you kind of have to make the switch now, and then start asking yourself, okay, if you're holding cash right now, you're actually watching it go down 30% a year in Bitcoin terms, at least. So is it worth that extra safety to have this thing go down 30% in Bitcoin terms? So, and I would argue, to some extent, there's some case for it, depending on your wealth levels and your income levels and everything else. But there's also a pretty strong argument to be made for the next 5 years to be kind of Bitcoin only. But if you're dealing with your future and you're planning on living, 50 years, then you have a different calculation, I think. A lot of people can't have to buy Bitcoin treasury companies because they can't buy ETFs, and they can't buy Bitcoin in their retirement account or whatever. So for those people, I think it's okay. Like if the choice is buy MicroStrategy or buy nothing, I prefer to buy MicroStrategy, right?
For sure.
If those are your two choices, and that's why I think fundamentally that's their thing. Now, on the other hand, there's a lot of people who are like, well, I'm a little greedy. I want to lever up. My point is, I think if you want to lever up, there's other ways of doing it that might be better than MicroStrategy or some of these Bitcoin treasury companies. You can borrow against your Bitcoin. You can buy calls on Bitcoin. You can sell puts on Bitcoin. There's various things you can do to achieve a little bit of leverage. I think anything more than just a little bit of leverage is not a good idea with Bitcoin. And in general, I kind of feel like Bitcoin is going to deliver such a great rate of return that for you to try to mess it up by doing something fancy, the chance of you screwing up is pretty high. I realize a lot of people got quote unquote rugged, but from these ETFs. If you actually own Bitcoin, but not like a proxy, if you actually own Bitcoin, you don't need to. You don't need to do anything more It's a simple thing. You buy Bitcoin, you don't sell Bitcoin. Now, easier said than done,
Krueger shares his bold predictions for Bitcoin in the months ahead. Now that he's laser-focused on Bitcoin, Krueger not only lays out the revolutionary Bitcoin power law model, but also explains why he believes a $1 million Bitcoin isn't just possible, it's inevitable. He says the current volatility is a natural phase of Bitcoin's maturation and could present a once-in-a-lifetime investment opportunity. Krueger highlights how Bitcoin's decentralized nature and finite supply make it uniquely positioned to withstand economic turbulence, asserting that it will eventually outcompete traditional fiat currencies. His conviction? Bitcoin isn't just a speculative asset, it's the future of money, and those who invest now could be part of a financial revolution. He's practically waving the green flag on what he thinks could be the most explosive crypto cycle yet, running straight through 2026. All the classic signs are flashing: global liquidity turning higher, Bitcoin dominance stalling, and Ethereum sitting in prime position to lead the next wave. If history's any guide, we know what happens when the M2 money supply starts climbing. Capital races down the risk curve. The first stop is Bitcoin, and before long, the entire altcoin market starts lighting up. The stage where prices don't just rise, they launch. What do you think about Fred Krueger's prediction for Bitcoin and where he sees the world of crypto in the months ahead? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.